Hello and welcome to the RICS DPB Scheme webinar. The objective of this webinar is to introduce and understand the basis of the DPB scheme to RICS DPB registered firms. My name is Waqas Mahmood and I am joined here in delivering the webinar with my colleague Kelly Cronogue. We are both finance technical specialists in the RICS profession support and assurance team. Kelly has a particular experience in the DPB scheme rules and how these rules can be best applied. This is a pre-recorded webinar, and so we will not have the opportunity to answer your questions live, but we would be delighted to answer any questions or to hear any feedback via the RICS Insight community, and we will talk more about the Insight community later in the webinar. I will talk you through the background to the DPB scheme, the training requirements, and commission disclosure requirements. Kelly will then go through the relevant disclosure and documents that need to be issued to insurance clients. A copy of the slides will be available from the RICS website and Insight community. Firstly, some background context. Since 14th of January 2005, general insurance intermediaries have had to be authorised or exempt from authorisation by the FCA. There is also a limited exemption for professional firms whose regulatory body has been designated as a DPB under Part 20 of the Financial Services and Markets Act 2000. This exemption regime is designed to exclude professional firms which are not carrying on mainstream financial services activities from the requirements to be authorised by the FCA. Instead, they can be licensed by their professional body, in other words, the RICS, to carry on a regulated activity in the UK without the appropriate FCA authorisation or via an exemption, such as through the RICS DPB scheme, is a criminal offence under Section 19 of the Financial Services and Markets Act 2000. RICS is a DPB under the Financial Services and Markets Act, and the rules of the scheme are approved by the FCA. Most DPB work undertaken by the firm is usually an extension of the management services that most firms offer. Therefore, insurance is normally ancillary, an add-on, and may not be actively advertised. Authorization to carry out insurance-regulated activities is only required if regulated activities are conducted by way of business and for remuneration. If you provide insurance-related services as part of a wider property management services, you are likely to be carrying on those activities by way of business. You will be carrying on the activities for remuneration if you receive any form of direct or indirect payment, benefit, or consideration in relation to the services. In practice, if you are carrying on any insurance-related regulated activities as part of your business as a property manager, the for remuneration test is likely to be met. Note that remuneration for insurance activities may well arise even if you are not paid separately or specifically for particular regulated activities. These can include a low or no discount bonus or a reduction in the firm premium. So, what are the regulated activities in relation to general insurance work? Firstly, dealing in insurance contracts as agent. This may arise, for example, where a property manager, managing agent, representative, or someone else within the company or firm acting for the client commits the client to enter into an insurance contract, for example, by accepting a quotation from an insurance company or an insurance broker on a client's behalf. Committing an insurance company to providing insurance for a prospective policyholder is also a regulated activity under this heading. Second, arranging, bringing about deals in insurance contracts. A person brings about a contract of insurance if their involvement in the chain of events leading to the insurance policy or contract is important enough that without it, there would be no policy. Examples include negotiating the terms of the insurance contract on behalf of the customer or assisting in the completion of a proposal form and sending it to the insurer, or clients asks you to arrange a contract of insurance that they have chosen. Third, making arrangements with a view to transactions in insurance contracts. This activity contrasts with the first two, that it is not limited to instances where involvement actually results in an insurance policy or contract being concluded. It includes the activities of persons that help policyholders fill in or check applications or proposal forms, and situations where a person introduces clients to an intermediary or broker for advice or assistance. Next, assisting in the administration and performance of a contract of insurance. This activity relates in broad terms to activities carried on after the policy has come into force, in particular in the event of a claim, where you act on behalf of either the property owner or the tenant or leaseholder in the discharge of their responsibilities under the insurance contract. This may include notifying a claim, providing evidence direct to the insurers, claim managers or loss adjusters in support of the claim, and or helping to negotiate its settlement. Note that this activity is centered on direct communications and negotiations with the insurers or their representatives on behalf of the policyholder or beneficiary. If you are only providing information to the property owner to help him or her to make a claim, that in isolation is unlikely to amount to a regulated activity. Fifth, advising on insurance contracts. This has to be advice, not information. For example, a firm makes a recommendation on a particular insurance policy. For advice to fall within this provision, it must, firstly, relate to a particular contract of insurance. Second, be given to a person in their capacity as an insured or potential insured. Third, be advice intended to result in a particular action or change. And finally, relate to the merits of a person buying, selling, subscribing for, or underwriting a contract of insurance. And finally, agreeing to carry on any of these above activities. So entering into a management agreement to provide services that consist of regulated activities above is also a regulated activity. The rules and guidance are governed by two documents. Firstly, the Designated Professional Body Scheme Rules 2018 and the Guidance to the Designated Professional Body Rules 2018. The links to both documents are provided at the end of the webinar. As previously stated, an RICS firm with a DPB license does not require authorization from the FCA. The RICS has been designated as a DPB and therefore can grant DPB licenses to firms whose regulated activities fall within the scope of the exemption. This means that for a firm to qualify for a DPB license, any general insurance work that it carries out must be incidental to the provision of surveying services to individual clients. Therefore, the contract of insurance must arise out of or be complementary to a professional service provided by the firm. So an RICS licensed DPB firm who also practices part-time as a vet would not be able to sell pet insurance in that capacity under the umbrella of the DPB license, because that selling of pet insurance would not be incidental to the members' RICS regulated professional activities. But an RICS member who arranges all the insurance requirements for an estate that they manage for a client, which might include insurance for animals kept on the estate, will be able to make the arrangements under the umbrella of a DPB license, because arranging that insurance is incidental to the RICS regulated surveying services which the member provides to his client. Estate insurance is probably the most complex area in determining the incidental test. Fundamentally, it needs to be understood that RICS regulated firms are ancillary insurance intermediaries and not a direct insurance provider to members of the public. Examples of insurances that are considered incidental to the surveying activity include building insurance, property owners insurance, loss of rent, engineering insurance. Examples which are not considered incidental to the surveying activity are directors' and officers' insurance where the firm do not manage the property. Firms are not permitted to carry on the following: consumer credit activities, including referring clients to credit brokers, for example, providing loans or applying interest. Arrange insurance for persons who are not clients of the firm. Arrange insurance that are not considered incidental to the surveying activity. Be dual FCA and DPB registered. There are some exemptions. In the case of block managers, where the firm are registered as the company secretary for an RMC or RTM, any activities that they undertake on behalf of these clients is outside the scope of insurance regulation. For this exemption to apply, firms must have a company secretary agreement with their client detailing that they are undertaking insurance activities in the capacity of company secretary. The firm are able to hold an appointed representative agreement with a broker in order to carry out activities not covered by the DPB licence. Moving on to professional indemnity insurance. Prior to the 1st of October 2018, the professional indemnity limit was 1 million cover for each and every claim. This is no longer sufficient. Under the IPID, the minimum required limits of indemnity now are for each and every claim 1.25 million euros and to be in the annual aggregate of 1.85 million euros. Some firms applying for a DPB license have a PII limit of £1 million. This will not be adequate, and so the level of cover will need to be increased to meet the requirements. Training and competence. Before undertaking any GIDA, the DPB licensed firms must ensure that their principals and staff undertaking insurance works have the appropriate knowledge to do so. The firm must appoint a DPB firm representative who must be an RICS member. This requires RICS members in DPB licensed firms who are involved in insurance distribution to allocate sufficient hours of their annual lifelong learning to general insurance to ensure that they continue to meet the requirements of the RICS DPB scheme, and firms must ensure that staff who are not members of the RICS but undertake insurance works remain adequately trained. Principals and staff members are also required to be fit and proper persons to carry out general insurance works. When the rules changed on the 1st of October 2018, there were perhaps not many training opportunities. However, there are now more and more ways for RICS members and staff members who deal in insurance work to ensure that they are adequately trained. These include online courses, broker courses, seminars with the insurers, renewal meetings with the brokers, informal training, for example, reading relevant articles, reading the RICS DPB rules and guidance. This recording of the RICS DPB webinar will also constitute as training. The fit and proper person test can be found at the professional requirements at 2.4 of the DPB rules, which goes on to say a DPB licensed firm that carries on GIDA must establish on reasonable grounds that all the persons in its management structure and any staff directly involved in GIDA are of good repute. A person of good repute is one who has not been convicted of any serious criminal offences linked to crimes against property or related to financial activities other than spent convictions, and the person has not been adjudged bankrupt unless the bankruptcy has been discharged in any country. Staff involved in GIDA must always act honestly, fairly and professionally in accordance with the best interests of the client, as well as possessing an appropriate level of knowledge and competence to carry on any insurance distribution activities. In addition, staff members carrying on any insurance distribution activity must not be remunerated or their performance assessed with the type of insurance work offered to clients, or in any way be incentivized by the way of remuneration or sales target to recommend any particular insurance product. I will now hand you over to Kelly for the next part of the webinar, who will go through the relevant disclosure and documents that need to be issued to insurance clients.
Thank you, Waqas. As Waqas has stated, I'm going to discuss the documents that you need to provide to your insurance clients, both before any insurance distribution is undertaken and also during the insurance renewal process. So the first document we're going to talk about is the Terms of Engagement. So the Terms of Engagement must be issued to clients before you undertake any general insurance distribution activity for them. You must provide the Terms of Engagement in a durable medium, setting out the services to be provided. A durable medium is any instrument that allows the recipient to store the information. So for example, this would be paper or email. The documents can be provided by email. However, if a customer requests, you must provide the information on paper free of charge. Now we're going to go through the list of what you would need to include within your Terms of Engagement. Firstly, the name and address of the firm, and also the contact details of the person within the firm who is responsible for general insurance distribution activity. You must also state that your firm is an ancillary insurance intermediary. Information about the nature of services being provided, such as arranging insurance and/or claims handling on behalf of clients. This is to ensure that clients are fully aware of your firm's involvement in relation to GIDA. Next, you need to provide information explaining that GIDA is limited to arranging insurance through brokers who will look at the whole market. If this is the case, it should also be made clear to clients whether or not the firm will offer any advice or recommendations. This information will need to be stated again in your demands and needs statement, which we'll discuss shortly. Next, you need to state the details of any remuneration received in relation to the insurance contract. So this would be commission or any low claims, discounts or bonuses that you receive. The definition within this section is that you must state the nature and basis of the remuneration that you're going to receive. Next, you also need to provide information about the advice and standards given for advised and non-advised sales. Next, you need to state that the client will be issued with an insurance product information document if insurance is being arranged on their behalf. We'll discuss the insurance product information document later. And you also need to state information on whether the DPB licensed firm undertake any cross-selling. This is where an insurance product is ancillary to a good or service which is not insurance that are being sold as one package. The next item you need to include is the firm's regulatory status. The exact wording is provided on the slide. This wording needs to be included in full in your Terms of Engagement and cannot be amended. The next point you need to include is notification that you operate a complaints handling procedure, and also include the name of the person who deals with complaints within your firm and the details of any redress providers that you are subscribed to. Finally, the last piece of information you need to include is that a valid claim against the firm for direct loss of client funds, which is not met by the firm, may be met by the RICS Client Money Protection Scheme. So moving on to a demands and needs statement. So this is a piece of information that needs to be provided to clients if your firm is involved in the first regulated activity that Waqas mentioned earlier, dealing in insurance contracts as agents. So if you're processing a renewal on behalf of your client through a broker. So a demands and needs statement is an uncomplicated statement which is user-friendly and clearly sets out prescribed pieces of information. The demands and needs statement needs to be issued in advance of the renewal taking place. So this is before the policy renewal date. You would also need to issue a demands and needs if there was a significant change during the period of the policy. So that would be known as a midterm adjustment. So the information that needs to be included on a demands and needs statement is a record of the client's insurance requirements. So for example, that they require buildings insurance for the full reinstatement value. Next, the type of product which is being purchased. So this would be your recommendation or the policy that your broker has recommended that the client purchase. Next, whether or not they have received any advice and a recommendation on the product. So if you are not providing advice or recommendations, you should make it clear to your clients that this is the case and that they need to read through the policy documentation and determine if this is appropriate for their needs. And lastly, if you have provided the client with advice or recommendations, you need to explain your reasons why a particular contract has been recommended. In both cases, whether or not advice or recommendations have been provided, you do need to demonstrate within the demands and needs that the policy that you are recommending or putting forward to the client on behalf of the broker matches their insurance requirements. Next, we're moving on to the Insurance Product Information Document, also known as an IPID. This has been a requirement since October 2018, and there are different requirements depending on whether you are dealing with a consumer client or a commercial client. The IPID provides key details about the insurance policy being offered. So starting with consumer clients, a consumer client would be someone who is not acting in the course of business, for example, a tenant purchasing tenant's contents insurance. The IPID document must be issued to the consumer clients in every instance, whether the client has received advice or not. The IPID for consumer clients should not generally exceed 2 sides of A4 paper and never more than 3. When you're dealing with a consumer client and their related insurance policy, the responsibility for producing this IPID would lie with the manufacturer of the product, so the insurance company. But as a firm, you are responsible for ensuring that the information set out is correct and consistent with the client's demands and needs. There is a standard format that must be used for an IPID for a consumer client, which is detailed in Appendix A of the DPB Rules 2018, and which we'll show you in a couple of slides. Here is a list of the information that must be included for an insurance product information document. Firstly, the type of insurance. Secondly, a summary of the insurance cover, including the main risks insured, the insured sum, and where applicable, the geographical scope and summary of the excluded risk. Third, the means of payments of premiums and the duration of payments. Fourth, main exclusions where claims cannot be made. 5, obligations at the start of the contract. This will include information such as to disclose all relevant information. Number 6, obligations during the term of the contract, which will generally include things like keeping the property well maintained, keeping the insurer up to date of any changes. Number 7, obligations in the event that a claim is made. Number 8, the term of the contract, including the start and end dates of the contract. And number 9, how the client would go about terminating the contract. Here is a copy of the standard IPID template that must be used for consumer clients. So as I mentioned, the insurance company will provide this to you. You must check that everything is correct, but this shows you what you should be looking out for and what you should be sending to your consumer clients. Moving on to commercial clients. So a commercial customer is someone acting in the course of business. For example, a landlord who is letting out a property would be classified as a commercial client. So when you're dealing with a commercial client, you may choose to provide some or all of the appropriate information that we've listed on the previous slides in either an IPID, a policy summary, or a similar summary, so long as all the information is provided to your client in a way that they can understand. Here is an example of an insurance product information document that could be issued to commercial clients. So as you can see, you've got all the different headings that we referred to a couple of slides ago, exactly the same headings as you would provide for a consumer customer. I'm now going to hand over to Waqas, who's going to discuss with you commission disclosure requirements.
Thank you, Kelly. The next 2 slides will talk about the commission disclosure requirements. Under the Financial Services and Markets Act of 2000, a firm can only be an exempt professional firm under a DPB scheme if it accounts to its clients for any pecuniary reward or other advantage arising out of regulated business done for that client. The FCA consider this requirement to mean that the firm must hold to the order of its client any such reward or advantage. In the context of the RICS DPB scheme, reward or advantage will include any kind of fees, commissions from brokers or insurers, including commission on insurance renewals. Therefore, commission is client's monies, and the firm must treat it as belonging to the client. Therefore, the firm should not transfer the commission received into their office account without their client's informed and specific consent. The firm can only retain the commission if they receive informed and specific consent from clients. Otherwise, in the absence of informed and specific consent, the commission must be paid to the client. The consent can be obtained via email as long as the client's response is specific and informed. Firms cannot rely on a general provision in their terms of business. This is overarching consent and not, as the rules require, informed and specific consent. The firm will be required to obtain in writing their client's informed and specific consent on an annual basis. This requirement is a fundamental condition of the DPB exemption in the Financial Services Markets Act, under which the RICS DPB scheme operates. It is simply not an RICS requirement, it is a matter of law. The FCA looks to the DPBs to ensure that the requirement is observed. It is important to understand that the requirement is about ownership of commission. It is not simply a requirement about disclosure. The commission disclosure requirement test can be applied retrospectively. Therefore, firms are required to retain records for all consent received. If your firm has not had a prior visit, then you can expect a request for all commissions received. If you have not previously kept records, then a good starting point would be to review all the commissions receipted from the broker, who may also provide how the commissions are deducted from insurance premiums. However, if the firm are unable to locate clients to obtain their informed consent, then these monies must be held in a client account and treated as surplus funds in line with the client money requirements. Finally, firms do have the choice of charging a fee for their insurance works. They must, however, ensure that the fees does not equate to the commission figure. I will now hand you back to Kelly, who will go through the final points of the webinar.
Thank you, Waqas. First area I'm going to discuss is in relation to the COVID-19 pandemic and how this may have affected your GIDA work. As COVID-19 continues to disrupt business activity and social distancing remains widespread, the RICS understands that regulated firms may have concerns over how this impacts their ability to maintain processes and controls they have in place to comply with the DPB rules. The required documents that I've set out earlier are still required to be sent, and as we mentioned earlier, this can be done electronically. If your client requests so, a hard copy of the documents must be provided free of charge. We would advise you to speak to your client in this instance if you are having issues getting into the office to print documents and provide them with hard copies. Potentially, you could agree with them to send them at a later date. And you should also contact brokers in good time before your renewals in case they are having staffing issues or if renewals are being processed slower. Next, RICS has created an online community called the RICS Insight Community, where property professionals can interact with one another and also engage with RICS staff. There are different groups within the community. The one that sits with our team is the Global Regulatory Support and Assurance Group, where regulated firms and other property professionals can ask technical questions and obtain guidance in relation to all of our regulated schemes, which are listed here. So the Client Money Protection Scheme, the Valuer Registration Scheme, and the Designated Professional Body Scheme that we've been discussing today. Finally, here are some useful links to signpost you to the DPB rules and other areas of guidance. Firstly is the RICS webpage in relation to coronavirus, which gives further advice on how firms can continue to operate at this time. The second and third links are signposting you to the DPB rules and the DPB guidance. And the final link signposts you to the Insight community that I mentioned just now. Thank you for watching this webinar.